He said, I went home and asked my mom, I said, how am I married 32 years and I don't know what life insurance is? How did you know about life insurance, right? And she says, well, when I was growing up, the life insurance agent was everywhere. He was the Cub Scout leader. He was the pastor at church. He was your next door neighbor. And now that's not true. Most life insurance agents are only selling to the upper 20% income brackets, and no one is seeking out the average person.
Yeah.
And so this company, was really about that. So Pendella was really, we're gonna fix that problem.
Welcome to Business Ninjas, brought to you by WriteForMe, where you'll hear from business leaders who are out there growing their business and slaying it every day. Learn from the masters. Let's get started.
Hey everybody, welcome back for another episode of Business Ninjas. I'm here today with Bob Gaydos. He's the CEO and founder at Pendella. Bob, welcome to the show.
Thank you. Nice to meet you.
Yeah, excited to have you on the
Thanks
show
for having
today.
me.
Yeah, excited. So Bob, tell me a little bit about yourself.
Well, I'm definitely a serial entrepreneur. It's a strange word to use because usually the only time you ever see that word is in front of serial murderer. But a serial entrepreneur, and I'm not sure my wife could tell you what that actually means. But other than this, in the last 35 plus years, I've been involved in 17 companies, either as a founder or co-founder or investor or advisor. So last 32 years were in the life and health business. So 15 of those 17 were in the life and health business. 3 of my 4 adult children actually followed me into the business.
So tell me more about Pendella.
Well, I've been in this business 32 years, and when I got in this business 32 years ago, I actually started as a life agent. But I very quickly became a health underwriter because I was more fascinated by the commodity aspect of health insurance and rates and, shopping and going through renewals. But I spent the first 5 or 6 years of my career inside of life agencies, being a health underwriter for the life agencies. Mm-hmm. And, at that time, life insurance, individual life and individual disability was pretty core to what was going on at the employer. And the business completely got separated in the middle 90s, right? If you go back in time to the early 90s, every life insurance company in America, Northwestern, Principal, Mass Mutual, all of them, they had health insurance companies. And then the states started reforming health insurance. And so the first thing that happened was the life insurance carriers just sold out. They didn't want anything to do with it because the states were reforming medical loss ratio. And so the world just divided, and us health underwriters got kicked out of the life world, and we became employee benefit specialists. And the life insurance agents just completely abandoned the employee marketplace. Mm-hmm. Fast forward 30 years later, and we have the problem we have today, which is half of America has no life insurance at all. Mm-hmm. Right? It's like this 32-year-old guy in the insurtech I met a couple of years ago said, because he fell into the insurtech world of life insurance and he didn't know anything about it. And he said, I went home and asked my mom, I said, how am I married 32 years and I don't know what life insurance is? How did you know about life insurance? Right? And she says, well, when I was growing up, the life insurance agent was everywhere. He was the Cub Scout leader. He was the pastor at church. He was your next door neighbor. And now that's not true. Most life insurance agents are only selling to the upper 20% income brackets, and no one is seeking out the average person. Yeah. And so this company, was really about that. So Pendella was really, we're gonna fix that problem. I wrote the business plan 12 years ago. That's how long it took to get here.
Wow. Okay.
Yeah. Okay. And go ahead, Kelsey.
No. 12 years. That's a bit of a venture to take on.
Well, what I felt was going to happen, so the Affordable Care Act it was clear it was going to pass. It's like, early 2010, it's going to pass. It's going to become a reality in 2012. And mm-hmm. I thought that would force the employer market online, which it did. And that would allow us to create digital marketplaces, which it did. And those digital marketplaces could bring us back to the future, which mm-hmm. is that, okay, we could bring individual life and individual disability back to the employer. Because it's not just that we abandon talking to middle America and don't even tell them about individual life insurance. It's that it's what we left them with wasn't that good, mm-hmm. which is group life, mm-hmm. The group life has all sorts of problems. You're only covered if you're actively at work. It's usually capped at $300,000 to $500,000, which is nowhere near enough money for a family of four. You can only get half for your spouse. Okay, you can only get $5,000 or $10,000 for your children. You can't take it with you. If you're healthy, it's cheaper on the streets. If you're sick, it's a good deal, but you can't take it with you. And I'm like, okay, this will allow us to fix this problem. Yeah. And then the other thing, that was the early stages of discussion around how big data could be used, right? And so I'm like, okay, we can use big data to get rid of the blood and urine and attending physician statements and make this a better buying experience. And we can bring it inside of this online experience. That took a long time, okay? If you go back to 2010, 11, 12, there were barely any truly online administration companies. There were the big monsters like Workday, but nobody was down in the sub 5,000 market. Mm-hmm. And so it took time I was involved with two of these companies, Maxwell Health and GoCo. So it took time for those companies to establish the market. Now today, it's all true, right? You got Ease, Employee Navigator, and SellerX, and all these companies. And pretty much all employers down to 10 are using some form of digital enrollment, benefits payroll. In fact, all the payroll is pretty much online, right? Mm-hmm. So it took a long time for the market to get online. Mm-hmm. And it also took a long time for the big data to get where it is. When we ran a pilot in 2017, that's like about 6 years now, right? And it barely worked, right? No. So it took a long time to get here. It took but you're talking about the insurance agent. You're talking about the insurance world. It's like, one of the companies I was involved with, Limelight Health, which was a successful company and was acquired by Phineos and doing underwriting for the group world. We had all these young kids working for us, and we would go visit Mass Mutual. And I would say to them, you realize this company was founded in 1850. You realize that we're going to walk into this room and there's going to be 20 people sitting around the big table. And most of them have been here since they were 20 or 21. Change to them is something that happens over 5 years, not 5 minutes.
Yeah. And right? That's quick for 5 years.
That's right. And so you had this, the venture capital world of, disrupt and get things done coming into this really old world. Mm-hmm. And so all that just took a long time.
Yeah. So, one of the, I'm assuming kind of one of the challenges that your customers have before they start, working with Pendella is that lack of underwriting, experience, technology. Talk to me a little bit about kind of what that looks like.
Well, in the beginning, we thought we were kind of going direct to market. There are companies that cut the trees down, and kudos to them, Ethos and Bestow and Ladder Life and Policy Genius. And they cut the trees down. They showed that you could create a digital world for life insurance, right? And in 2017 and 18, we kind of thought that's what we were going to do. But in the pilot, I saw very quickly that the only winner was going to be Google AdWords. Because as soon as you start battling for a consumer out on the internet, if you're just using the traditional channels of, Google AdWords or whatever, Facebook, all you're doing is driving up the acquisition cost. Mm-hmm. And so it's like, okay, this is not the path. We got to find a different path. And so we kind of stumbled our way into what we really are today, which is, and there was a few people involved in the company. Dave Burkhardt was one of them that just said to me one day, I think this is an enterprise solution for the alternative market. And he was right? So we kind of said, okay, you know what we are? We're a white labeled embedded insurance solution for life and disability. Mm-hmm. And we're going to go into alternative markets where the purchase of individual life and individual disability is a natural extension of the existing digital customer relationship. Mm-hmm. And so very quickly that got us to say, well, as in the consumer world, that would be banks or credit unions or mortgage, right? That's natural. Maybe 401ks, annuities. But then we looked at the employee world and said, all these employees now have these digital relationships. And that was always where we wanted to go. But, like I said earlier, and so that's what we decided that's what we're going to do. We're going to become this white-bedded insurance solution. And we're going to embed ourselves into those existing digital customer relationships that have now taken off inside of that employee benefit world, right? And life and disability is a very natural extension. Mm-hmm. because when you go to work for that employer, they're giving you that group insurance, right? Mm-hmm. And so there we go, we can go there. So it kind of went from, hey, we wrote this business plan to, hey, look at Ethos and Bestow are doing. We'll try to do that, to, no, that's not a good idea. Let's go back to where we originally wanted to go. Because what it allows us, there's really some really incredible things we get out of being embedded into the employer systems, benefits, payroll, and HR, right? First and foremost is data, right? They're sitting on an enormous amount of data around those employees. And that data is the secret to the risk and market segmentation. They've got the existing digital relationship. There's frequency to the relationship. You got to go in and get your paycheck. You got to go in and enroll in your benefits on an annual basis. You got to go in and get your time off with the HR. Okay, all of that. And so that's what we have evolved into over the last couple of years, and that's where we've taken off to, and we've got ourselves embedded in quite a few platforms in the marketplace.
Yeah. So talking about those platforms and being an extension of the employer, are there trends in size companies, clients that you see Pendella working with?
Well, yeah, it's a great question. You kind of divide the employer market is kind of divided into three groups. I don't know where you want to draw the lines, but you got the small group, the mid market, and the jumbo market, right? And the small group, and to some degree, is interesting, but it's very disaggregated and it's got a lot of problems. So we really decided that the place to go was the middle market, and if we were going to go to the small market, we would do it to PEOs. So we went after the market, and we went to the mid market, and we went there through. We want to get to the systems. It was all about getting to the systems. I don't want to block and tackle through every broker and every employer in America. I want to be embedded into the platform, and then create demand pull from the employer through the broker into the platform, right? And so, I guess it was about 15, 18 months ago, we signed the contract with Prism HR, and that was really the first big change for us and really got us going. The PO marketplace, because, they've got the majority of the PO market is actually running on Prism's platforms, right? And then that got us to Venture, their biggest customer, and then Venture ended up acquiring Prism. And so, fast forward a year after we signed the contract, and we're up and running with a third of their business and about 31 PEOs. But we're white labeling to them. So, if you're Venture, the PEO, then that's what the employee is seeing, right? And we're embedded in a variety of different ways, right? Like it's all about, hey, place us where they're going to see us, integrate so we get the data on the APIs, and that creates convenience, but it also creates risk and market segmentation, which I'll talk about. And then let's, run evergreen campaigns to make sure people know that we exist. So we show up inside the dashboard and we log in, we show up on the sidebar, we show up during open enrollment. The data is feeding over for pre-fill and risk and market segmentation. We've got other deals that we're doing similar to that and other systems. But for us, it's like we want to get to the systems and then create that demand pull. We're going to start sometime later in this year to really kind of preach the gospel of individual life insurance. The HR people, the employers, they don't know the problem. It's interesting, the brokers, whenever we meet with brokers, telling them what the problem is about a 60-second discussion because they know it. As soon as you start it, like, yeah, I know, you're right. The group insurance is not adequate. They just don't want to cannibalize it because it is doing something fundamental, which is giving basic guaranteed issue to a certain degree. And so like, no, we're not trying to cannibalize it. We're just trying to make sure that, the husband and wife who are at this PEO and they get a household income of $150,000 and they need $1.5 million in coverage, but the PO is only giving them $500,000. Let's get them the other $1 million, and let's have it be individual. Let's have it be portable, and it's theirs, and it's a 30-year term, and they can take it with them, right? So that's what we're trying to do.
That's interesting. So, underwriting is all about analyzing risk and, an assessment. So talk to me, you started to mention a little bit about it, and I wanted to take a deeper dive into it, talking about like the risk of the market and segregation. Talk to me a little bit about that.
So for us, it's all about two things: segmenting these people by risk and segmenting them by the market, right? And, when we originally built what we call our recommendation engine, it really was a realization one day. I mean, I remember where I was when I started writing it, which was, what does a human agent do? And a human agent is actually field underwriting. And what that means is that you're out in the field underwriting on behalf of the carrier. You've got your manuals, they give them to you, and you're assessing that risk of that individual, and you're assessing their needs, okay? Because you don't buy life insurance with money, you buy it with health. And the second you don't have good health is the second you're not going to get life insurance, right? And so when you're first, it's like, hey, when I would go and meet with somebody at their house, I was assessing the situation, right? Mm-hmm. I could see them. I could literally see their BMI. I could see whether or not they smoked. I could see the house and the neighborhood they lived in, right? And I was really assessing that was, the medical aspect. Maybe had to ask them some questions around their health to try to figure out, okay, are they going to get elite, preferred, standard, substandard, decline? Because that's going to start the conversation, right? Because I can tell them they need $1 million life insurance, and that's just going to lead straight to how much. Well, if I haven't assessed their risk, then I'm going to really, because it could be $10 or it could be $200 for the same product, depending on your health, right? Well, with big data, we can do that. Right? With big data, we can get a preliminary look at what the risk category is, and then very quickly, okay, now we know the right conversation to have and the right product to point towards. And then the next thing the big data does is personas, right? Because if I've got your first name and last name, I need your permission to do the health assessment, but I don't need your permission to do a market assessment, right? So if I've got your first name, last name, street address, I can find out if you got a mortgage, how many people live in the house, what's your household income, what are the age of the kids, do you have a home equity line? I can find out everything, right? Well, those are the same questions we would sit there and ask in the house, right? We used to have this thing called a needs analysis, which was one piece of paper, and we would ask them, do you own the house or do you rent? What's your mortgage? What's your payment? The kids, all of that. And then that would come up with a number, and you'd say, hey, you need $1 million in coverage. So the whole point here is wait a minute, these are existing employees of an organization, which means therefore the broker, and we're working through the broker, has permission to talk to them, permission to underwrite them, permission to sell them, okay? So we're going to use those permissions to be able to risk segment, take them on the right path, and the market segment to have the right conversation with them. Am I talking to a single mother, age 30 with one kid who's renting? Or am I talking to a 50-year-old empty nester with 2 kids in college and the house only comes $250,000? I mean, these are 2 significantly different conversations, right?
Yeah.
So then we could personalize the content, personalize the UX. And, the agent still interacts about half the time. And now the agent doesn't need to ask those questions. It's all at their fingertips, right? When the agent is talking to them, whether it be chat or screen share or Zoom or whatever, Salesforce is sitting there telling them everything that they need to know about that person's risk and their persona.
So do you think this new technology utilizing the big data, it takes maybe some bias out of, the process and makes it a little more, what's the word I'm looking for, streamlined? Do you think it makes it a faster assessment?
Well, it certainly streamlines it and certainly creates convenience, because you're getting rid of a lot of the reason why. I'll go back to the bias because that's a big question. I'll just go to the convenience first. A lot of the reason why agents weren't trying to sell ordinary people was the average premium is, let's say, is $1,000. They were going to maybe make $500 to $1,000, and it was going to take a lot of effort, right? There was a manual process in the beginning of doing the needs analysis and the health analysis. Then there was 30 minutes of paper applications. And then you were pushing them into underwriting and case management and APSs. And man, you might have literally like 10 hours involved by the time you're done. And it was like, man, I can't make any money doing it, so I don't want to do it. And then a lot of the reasons why, people that weren't necessarily buying is the buying experience was so bad, right? I remember one time I was in home office of Prudential, and I said to them, at that time, one of my daughters was like 30. And I said, let me tell you what my married 30-year-old daughter is never going to do. Let a Prudential life insurance agent sit in her kitchen and talk to her for 30 minutes. Never going to happen. Never, 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 never. Okay. Everything starts on the internet. It may go personal. You buy the car in person. You buy the house in person, but you started all the preliminaries online. That's what you were doing. So, we've got to get there. And then, so they certainly didn't want to do the beginning part, which was meet with an agent, which they kind of view like a used car salesman. And then they would go into the experience and go, man, they're coming to my house, they're taking my blood, they're doing an EKG, and then I got to wait 5 or 6 weeks for the attending physician statements. It was a horrible experience. Yeah. Now, look, we haven't totally eliminated that because the big data underwriting has its limits. It might be $1 million at age 40 or 500,000 at age 50. So if somebody comes in the door and they're 55 years old and they need $2 million in coverage, well, we're still kind of in the old fashioned world. Now that's going up over time. The carriers are talking about upping those big data limits to 2 million, maybe within the year, right? So as time passes, I think, that'll be less and less that you'll have to go through that old experience. The bias question, I mean, that's, AI could be just as biased as a human.
Absolutely.
Right? So that's something I'm going to be concerned about later in the year as the volume really picks up. Mm-hmm. And the machine learning has a lot going on that we're really going to pull it out and really analyze it. Even before this call, I was inside a mixed panel watching the behavior of a few thousand people over the last 24 hours, trying to see what was really, trying to get a taste for what really was going on, and not just assuming that the machine we built is actually not biased.
Yeah.
Right?
Yeah.
So that's going to be a tougher one in the long run.
Yeah. Yeah.
But we'll face that challenge once the volume's at really high levels.
But I think, again, too, that goes to the importance of education, and being, having the platform to have these conversations and educate people that, just like the conversation we're having right now.
Well, that's going to be the biggest one. There's no doubt about it. I mean, we're venture capital funded, and one of the venture capitalists said a year ago, I don't know if technology can solve this problem. And he said, obviously you can big data underwrite. Obviously you can make a buying experience that feels like Amazon. What I don't know is whether technology can help people understand why they need this product, right? Because it's somewhat of an emotional sale, right? And that's somewhat it is. Mm-hmm. When I was trained, I had this guy, Jim Kinniston, who said to me, at the end of the day, Bob, you got one job, make them feel the effect of their death on their loved ones.
Oof, yeah.
But he's right. Okay. Yeah. Which is, I'm not buying life insurance for myself. Mm-hmm. I'm buying it because I know what's going to happen if I die. What's the effect on my wife, my children, my business, whatever, right? That's why I'm buying it. Mm-hmm. And if I don't feel that need, then I'm not going to buy it. And once I feel that need, once I truly believe it, okay, then that's just a commodity buy at that point. I'm just going to find the policy that works for me because I don't need to be proven anymore. Yeah. So and we're already seeing it. I mean, we're up and running for a couple of years now, and we're picking up a lot of volume, and we're talking to a lot of these people, and they really don't understand the need. I mean, it's like, I've heard conversations from the agents with the chats. It's like, it's telling me I need $1.5 million in coverage. How in God's earth could I need $1.5 million in coverage? You're like, Joe, you make $150,000 a year. You got 3 kids.
Yeah.
If you die, $150,000 isn't going to last very long, is it?
Not going to get very far.
And they really haven't. They're like, yeah, you're right. It's not going to last that long, right? But no one's ever done that. The thing we're talking about right now internally, and we're going to work on in the coming months, is what I'm calling a moment of receptivity. And what I mean is, you don't get up in the morning and say, I'm going to buy life insurance. Okay. Mm-hmm. It's not like an iPhone where it's like you're desiring to buy it. Okay. You buy life insurance because something happened in your circle that made you realize your risk. Okay. I told this story recently to a potential new investor, and he said, Bob, you should know that last night my best friend died in a motorcycle accident, and my wife literally turned to me and said, do we have enough life insurance? That's right. So there's the obvious moments of I bought a house, I just had a kid. But then there's the ones that, what did those agents do? So there was an agent, I don't remember his first name. I think it was Ray Darling. So it's like 1990, right? And every morning he had 12 newspapers delivered to him. And he went through those newspapers looking for birth, deaths, house purchases, business purchases, right? Wow. And he then would make sure that he showed up. Like if, this guy has a kid who plays basketball, I'm going to go to the game tonight, and I'm going to make sure that I run into him, right?
Oh, wow.
So you could be like, Joe, I saw your brother died last week, and you and I, you don't have any life insurance. He was looking for those moments of receptivity. That's what he was doing. Okay.
Yeah.
Well, we could find that in big data.
Yep.
I can see life events. You can even find deaths within a circle of their relationships. You can find it. So we're going to start doing what we're going to do in a POC sometime in Q2 on that.
Yeah.
Because our databases are growing. They'll be over 1 million by that time.
Yeah.
And looking for those moments of receptivity.
Yeah.
And trying to pop up, whether it be on an email or a text with somebody who's already engaged with us, right? Because 95% of the people who come in the door and go shopping for life insurance don't buy. They're really just trying to figure it out, right?
Right.
But if they shopped twice in January and now I know in May that they bought a house, then I can pop up a text just reminding them that, hey, don't forget, come back. We can get you for $500,000 of life insurance. Now, does it sound a little spooky? Maybe. But.
No, but it's one of those things too. It's an unfortunate thing that I think a lot of people don't necessarily realize they need life insurance until they need life insurance, or till, like you said, those moments of
receptivity.
Receptivity. I was going to say something else. Receptivity, when they're like, oh wow, this is a point where something happened. Like, is it too late, or do I have time?
Well, the story I love to tell, the same guy that taught me how to sell life. When I was in my 20s, I had 2 restaurants, because that was what I thought I was going to build, restaurants, and so I had 2 restaurants, and he was one of my investors.
Yeah.
And unbeknownst to me, because the restaurants were 100 miles apart. And so I was in the other town at the other restaurant, and he took my wife to lunch and said to her, if Bob dies in a car accident on the way home tonight, do you know how to make payroll? Ooh. Scared the living, because she had no idea how we were going to make payroll.
Yeah.
Right? I have never left the house without life insurance ever since.
Oh. I mean, hey.
But that's the reality of it.
Yeah. Yeah. Right? Yeah. Wow. Well, Bob, as we start to wrap up this conversation, do you often hear a lot of misconceptions? I know we started to kind of talk about some of them, misconceptions about, life insurance, kind of that, people may not think that they necessarily need it. Is that the biggest misconception that you hear?
There's no question. The first misconception is the need and how much they need. Mm-hmm. Okay. And then, of course, at some point, there's a lot of confusion over, do they buy term or permanent? Right. And the answer is both.
Okay.
Right. But it's hard to start the conversation with permanent. Again, 30 years ago, and this is one of the things we're going to do in the coming couple of years. The agents were all equipped with annual renewable term, and it was dirt cheap. And the idea was, don't leave the house without protecting them. Okay. Yes, they should have a whole life policy to protect them for their whole life, but they're going to get scared by the price, and they're not going to understand that it's an investment and that they're going to get all their money back plus interest. Mm-hmm. So if that happens, just take an app on the annual renewable term, because it's like $2, right?
Mm-hmm. Yeah.
And it's annual renewable, and it gives you a reason to go back and talk to them again.
Yep.
Right. So the point of that story is, we're not going to, even with one individual, I'm not going to solve their entire problem in one fell swoop. Mm-hmm. Right. I've got to get them to a point that they realize they need it, how much they need it, and just buy it. And then from there, it can grow because you begin over time to understand it a little bit more.
Yeah. Yeah. That's really interesting. Well, Bob, if people wanted to learn more about Pendella, where would they go to learn more?
Well, we are white labeled, so most of us we're really promoting to be sold through other companies. But of course, the website Pendella.com, and of course LinkedIn, because we got a big presence on LinkedIn. So Pendella on LinkedIn or Pendella.com.
Great, awesome. Well, Bob, this has been a great conversation. Like I said, as we wrap up, is there anything that you want to leave our listeners with? Either about life insurance, about risk and market segregation, anything like that?
It is not possible to buy life insurance too early. It's not possible to buy it too young. And with every passing day, your ability to buy it and the price that it's going to cost you is going to go up. And, we get the calls, we get the people shopping who you're 45 years old, you think everything's fine, right? But now they're diabetic, right? Or they've got a bad family history of, something. And they're like, oh my God, what do you mean I can't buy regular life insurance? Yeah, you got to buy it early. Okay. And even if it is just a term product, because most term is convertible, you can buy it and then convert it to something else later on, just to get yourself going on the track. No different than like setting up a savings account. You can't start a savings account too early. You can't start a 401k too early. And every day that you let go by, you're falling behind.
Yeah, that's a really great insight, Bob. And, it's a tough conversation to have with people about, needing life insurance. But it sounds like, Pendella through other, other agencies is able to make that conversation easier, make the process a little more streamlined to understand kind of what the needs are, the terms and the benefits of being protected.
Yeah, absolutely.
Yeah. Absolutely. Well, Bob, this has been a great conversation. I really appreciate you taking the time to be on Business Ninjas today and breaking everything Pendella and life insurance down for me.
Yeah. Thank you, Kelsey.
Yeah, great to have you.